GBTC, which is Grayscale Bitcoin Trust, not the same as direct exposure to Bitcoin, discount hits an all-time low as SEC Bitcoin ETF, or electronically traded fund, decision looms. So I brought this up to you because I've been seeing a lot on Twitter. I've been seeing a lot around just different news outlets talking about that Grayscale should be buying back some of their Bitcoin to bring GBTC up to a higher price to alleviate the discount that's being provided on GBTC right now. Now, I don't think that they're fully taking into consideration the fact that when people purchase GBTC, they purchase it on purpose instead of buying Bitcoin directly, because they have the hunch that in the future, it might be trading at a premium to what it should be trading at. We've seen that in the past, right? In 2021, when all that euphoria set in, GBTC was trading at a premium to Bitcoin, meaning that the value of the shares of GBTC were higher than the value of Bitcoin. So meaning you actually made more money than you would have by just holding spot Bitcoin. So there's a lot of people out there who are going to be commenting on this, and they're uneducated on why people buy this to begin with. They don't buy this because they're confused and they can't just get on Coinbase and buy it themselves. They want a different kind of exposure. Moreover, Grayscale is filing to convert this to a spot ETF instead of a futures ETF, which will bring that spread on both sides closer in to where you won't have that heavy premium or that heavy discount. But understand that Grayscale is not in any sort of insolvency issue right now, and this is normal behavior in the markets. People are just upset because it's trading at a discount right now instead of that premium like they saw in summer of 21. All right. Something else I saw, again, we're going to be talking about how this all interweaves with Celsius. And again, these are just headlines. This is, institutional money being over leveraged right now. I'm not telling you guys you need to be fearful. I'm just showing you guys the narratives that are happening during this bear market. It's so crucial. If you guys need a journal, I've always recognized you guys a journal, at least at the minimum for your trading, but also to kind of just document how you're feeling during these moments. What are you seeing out there that's making you upset or worried? Because those are the kind of things that I want you guys to look back on in a bull market and be like, wow, look at the behaviors I was exhibiting during this time. Look at the headlines I was seeing at this time. Look at how I was feeling during this time, because it can be very disheartening, right? So I just want to talk you guys through this because it is important that we cover it. Crypto lending platform Babel Finance pauses withdrawals, citing liquidity pressures. The $2 billion fund announced that it's blocking customers from pulling out their assets after a slump in the cryptocurrency market. So again, we're seeing that some of these entities are over leveraged. They should be able to back up what they have with either cash and cash reserves, or if they are going to be leveraging those tokens, that they have sufficient cash reserves to be able to satiate those outstanding obligations and bring their LTV back up to a level to where customers can operate business as normal. Okay. And then BitMEX and other existing Three Arrow Capitals amid 3AC insolvency fears. As Three Arrow Capital struggles, its lenders have started liquidating the firm's positions, and portfolio companies are distancing themselves. So one of their exchanges has completely already liquidated Three Arrows Capital so that they could, bring their LTV up back to normal levels so they don't have to sue them, because I know a lot of people don't understand this, but if you guys are in Forex or another highly leveraged market where they offer you 1 to 500, 1 to 1,000, or something else of that matter, if your account goes into the negative and they're not able to close you out at a zero balance, meaning that they were able to close out all your positions fast enough to bring you out to a zero balance, you technically owe your market maker money, even though there may have been manipulation on the backside. So let's say some of these guys have multi-million-dollar positions open and they're not responsible and they let themselves get liquidated. It's entirely possible that they come back and hit them with a judgment action for the negative balance. And if they don't pay it, they can get a garnishment order where they have to start paying it every month out of whatever monies they have left. Okay. So I want you guys to see that there are investment funds that were irresponsible and assume that prices would never ever come back to these areas, and it's their fault for over leveraging themselves and not the market's fault for liquidating them, right? This is a contract they agreed to. Now, here's a little bit of a positive piece of news, at least for Celsius, right? MakerDAO votes to disable Aave DAI, which is the stablecoin supply, reducing Celsius's exposure. In an effort to reduce exposure to Celsius, MakerDAO has disabled the loans using STETH as collateral through the direct deposit module. So they're trying to alleviate some of the pain that Celsius is feeling right now. Again, I do think it's incredibly irresponsible that Celsius has not, first of all, given any sort of actual update to their customers, and that they haven't responded to Nexo's public offer to buy out all outstanding obligations. This could all go away if they just accepted it. Customers would be able to get to their funds, because here's the thing. At the end of the day, Celsius's business model did not work. It broke. And this is part of the stuff we're going to see in bear markets, right? Shit's going to break, and that's normal, right? And that's good that we find out what breaks so that we can fix it and make sure it doesn't happen again. And Celsius's model was over leverage, and they really shouldn't have done that in the first place. So they should just bow out, at least save their reputations, because here's the thing. Who's going to ever want to go back to Celsius at this point? Who's going to trust Celsius with their money? I know I wouldn't. So I think it's kind of a moot point for them to hold on to that. And then I saw this as well. Regulators in 5 states target Celsius over withdrawal freeze. State security regulators have opened investigations into the crypto lender's decision to freeze accounts, Texas enforcement director told Reuters. So again, this is now going to, of course, be an extension from the SEC. I expect an enforcement action from the SEC sometime soon. I would expect that more states are going to want to seek regulatory clarity into what happened. They're going to want to understand how this happened, how they can make sure it doesn't happen again. And again, a lot of this is still forming around this need for regulation around stablecoins, regulations around exchanges and how they have to behave, what sort of fiduciary responsibilities they have, right? There's narratives coming out of Congress, and then you have all of these fear events like Luna UST, the Celsius crisis, insolvency issues with Three Arrows Capital, right? So it was a darling of investment funds for cryptocurrencies for years. So understand that a lot of times you can't see what's going under the hood with some of these companies, and the weaker ones will fall and the stronger ones will rise. Okay. And then here's a little bit of piece of bullish news for you guys before we get into one other thing I want to address, and then the charts. Circle launches Euro-backed stablecoin financial service company Circle, which backs USDC 1-to-1 with healthy attestation reports. I would encourage you guys, if you're ever curious to understand how it's all backed, go to Circle's website, and you guys can download both the papers where they describe how they're backed, but you can also download an attestation report. And what that is, that's a third-party audit of their finances and their stated forms of reserves. And it's the ability to peer into that audit. So good or bad, all of that information is in there so you guys can make a decision for yourself. And that's why so many people have really flocked to USDC over time, because they've been so transparent and they've also held such a healthy backing. Okay. Now, before we get into the charts, something I want to address. We had a member question that came in on one of our other streams, and it was about analyst Benjamin Cowan, who, again, I look up to, I revere. I think that he's a smart guy. I think that some of his models are good. I think some of it is a little bit flawed. I think some of that comes from maximalism and thinking that a majority of altcoins that aren't in the top 10 aren't worth a whole lot. But the response that we got here from Benjamin Cowan was as follows. Alts are already down another 30% since you posted this video. You said that alts generally drop 80 to 80% in a bear market. Actually, that is not true. Many drop 90 to 95%, which makes a big difference. Well, first of all, the word many and much are different, or most, right? So many does not equal most, because there are plenty of alts that aren't going to drop 95%. The member question that came in was, Benjamin Cowan stated altcoins drop another 90% from here. Whether or not he fully said that, I don't know which episode this came from. But my defense to this statement was that I do not think altcoins are going to drop another 90% from here, which was from a few days ago. And I stand by that. I don't think they're going to drop another 90% from here. So just wanted to clear that up and understand that my information that I was receiving was from the member that asked the question, and not me just suggesting that altcoins can only go minus 80%. Bitcoin can go further than 80%, right? We've seen 80, 86% corrections from Bitcoin. Just because we've seen something in the past doesn't mean it can't happen differently in the future, right? We could see a minus 95% Bitcoin, minus 99% Bitcoin. It's all possible, right? And we don't want to jump to those conclusions. The majority, though, of what I responded to in that video that Benjamin Cowan did not address was that he was being premature, calling for above 60% Bitcoin dominance before we saw a Bitcoin bottom come in. He was calling for apparently altcoins to, drop an additional 90% from there. And I just didn't think that was plausible. And I thought it was a little bit too much of putting the cart before the horse there. But just want to make sure you guys understood where I was coming from with that.